Right now I will discuss very basic sums of ratio analysis. These sums are important for BCom general examinations. Net profit as per profit and loss account rupees 5,40,000, provision for tax 2,10,000, interest on debentures and other long term loans 1,50,000. Calculate interest coverage ratio. Profit before, look at the solution. Profit before interest and tax. Profit before interest and tax is 5,40,000 plus 2,10,000 plus 1,50,000, 9 lakh. Interest coverage ratio, the formula is actually net profit before interest and tax, it should be divided by interest on long term debt. That's why we have already calculated the profit before interest and tax, that is 9 lakh. It should be divided by interest on long term debt 1,50,000. That is already given in the question. Interest on debentures and other long term loans 1,50,000. That's why it came out as 6 times. Next question. Calculate interest coverage ratio from the following information. Net profit after tax 30,000, 15% long term debt 10 lakhs and tax rate 60%. Net profit after tax is equal to 30,000, tax rate is 60%. That's why net profit before tax will be 75,000. Why? Because we have calculated, that means 30,000, that actually the 40% of that amount, 40%, as the tax rate is 60%, therefore after deducting the tax the net profit is 30%. That means 40% is actually 30,000. Now we have to calculate it, what is 100%. The 100% came out as 75,000. In other way, if you can check it, if you charge 60% of 75, you will get 30,000. Interest on long term debt that is, long term debt is 10 lakh and the rate of interest is 15%. That's why it is 1 lakh. That's why it is 1,50,000. Net profit before interest and tax, that is net profit before tax, that is 75,000 we have calculated, plus interest, that is the formula. That's why we have to calculate in this way. Net profit before interest and tax 75,000 plus 1,50,000, that is 2,25,000, and the formula is, again we have just right now now we have done the same sum. Net profit before interest and tax divided by interest on long term debt, 2,25,000 divided by 1,50,000, that is 1.5 times. Next question. From the following information, calculate stock turnover ratio. Opening stock 20,000, closing stock 10,000, purchase 50,000, wages 13,000, sales 80,000, carriage inward 2,000, carriage outward 6,000. Stock turnover ratio, the formula is cost of goods sold by average stock. What is the formula of cost of goods sold? Opening stock at purchase at direct expenses minus closing stock. There is actually another formula of cost of goods sold, sales minus GP, but here the first formula, that is opening stock plus purchase plus direct expenses minus closing stock, this formula is applicable. And just we have put all the information and we have got the cost of goods sold is 75,000. What is average stock? Opening stock plus closing stock divided by 2. Here also I am telling you, students, you should note that in case of absence of opening stock, closing stock should be considered as average stock. Again I am telling, in case of absence of opening stock, the closing stock should be considered as average stock. That is, again the opening stock figure and closing stock figure is given and it is divided by 2 and it came out as 50,000. Next, stock turnover ratio is 75,000 by 15,000, that is 5 times. And the direct expense, that is explained, wages plus carriage inward, is these are the direct expenses. Next, From the following information, calculate stock turnover ratio. Opening stock 50,000, excess of closing stock over opening stock 4,000, sales 6,40,000, gross profit 25% on cost. Now, as right now I have said, there is two formula of cost of goods sold. The second formula, sales minus GP, is applicable over here. Why? Because as the sales figure and profit figure is profit percentage is given. That's why sales is 6,40,000 and the profit is deducted from there, that is 25% on cost. Again I am telling you, 25 by 100 should not be over there. Why it is 25 by 125? 25% on cost given. This is not given on sales. What does it we know that cost plus profit equal to sales. That's why 25% on cost means the cost is 100. If you put into a formula, that means 100 plus 25 equal to 25. That means sales is 125. That's why 25 by 120. Again I am telling, listen carefully. 25% on cost means the cost is 100. When you are telling that, sir, I have got 70%, that is the examination is evaluated on 100. That's why 25% on cost means the cost is 100. If we put into a formula, cost plus profit equal to sale, the cost is 100, profit is 25, automatically sales is 125. That means profit, that's why you must remember that as a student of commerce, the profit percentage on cost and profit percentage on sales is not the same. Percentage is not the same. Okay, profit will be same, but the percentage will not be the same. That's why 6,40,000 minus 25 by 125, 5,12,000. Closing stock equal to opening stock plus 4,000. As they have told, the closing stock 4,000 higher than the opening stock. We have calculated, then they have calculated the average stock, opening stock plus closing stock divided by 2, and the stock turnover ratio, cost of goods sold by average stock, 8.53 times. Next, a trader carries an average stock of 80,000. His stock turnover is 8 times. If he sells goods at a profit of 20% on sales, find out the profit. Stock turnover ratio, again cost of goods sold by average stock, cost of goods sold by average stock. Cost of goods sold is 80,000 into 8, as it is given. Just algebra. This is purely a jugglery of algebra. There are three variables. Turnover ratio is given 8 and the average stock is given. We have calculated the cost of goods sold 6,40,000. Sales equal to cost of goods sold into 100 by 80. The same formula is applicable over here. Sales equal to cost of goods sold into 100 by 80. Why? Because profit is 20% on sales. That means it is calculated, or profit is calculated on sales, that is the cost is 80. Cost is 80, profit is 20 and sales is 100. That's why sales equal to cost of goods sold into 100 by 80, 6,40,000 into 100, 8 lakh, and the gross profit equal to sales minus cost of goods sold, 8 lakh minus 6,40,000, 1,60,000. Hope students you understood. This is the very easier sum of ratio analysis. Next class we move on to the more sums of the same type.